Steve, thank you so much for joining us today. There's been a big push in the U.S. on acquiring rare earth elements, and the U.S. government has made many equity investments in a number of these companies. And as a result, many of these rare earth or critical mineral companies are up 100% or more on the year. And you and your team at Sprott have created many products for investors focused on critical minerals. And I want to discuss some of these products. But before we do that, why don't we just start with a brief discussion on rare earth elements and critical minerals and what exactly they are and why are they so important?
Yeah, absolutely. It's a great place to start, and thanks for having me here. Critical materials is a term that's used pretty much by governments, and it's really picked up a lot throughout the industry. And basically, critical materials have several different categories they could fall into, but predominantly it's those materials typically tend to be metals that governments are viewing as vital to whether it's energy security, national security. And typically in there, when we're starting to look at different critical materials, we tend to think of them around energy and what that means as far as the generation, transmission, and storage of energy. On generation, things like rare earths that you mentioned make up a group of those critical materials. Also, silver and uranium. Copper kind of falls under that transmission banner, really stretches it across all aspects of the energy life cycle. And then the battery materials, so things like lithium, cobalt, graphite, manganese, nickel. Those are the nine or so that we focus on. They've become increasingly important because, if you look at geopolitical landscape and how that's developed over the last, 4 to 5 years or so, what you're really starting to see is a lot of countries are waking up to the realization that a lot of the supply chains to these critical materials are outside of their control. So we're starting to see, countries realizing that because China has such a stranglehold on a lot of these critical materials like rare earths, where they're by far the biggest producer in supplying the globe, they're looking to increase domestic supply and encouraging mining and refining within their domestic borders.
You're right. The geopolitics is playing such a big part in everything here in the last 5 years, but maybe you can just tell us how important China is to the mining of rare earth elements and also to the processing or production of them.
Yeah, and this is something that China spent the last 2 to 3 decades really building out global supply chains. A lot of the critical materials that they'll mine come from other countries like Africa or Indonesia. And they'll bring those back to China in many cases for refining. Rare earths is really in the news because it's very important to a lot of aspects of, not only energy security, so think of things like EVs and wind turbines. But we see them used in AI data centers in certain cases, but also really importantly in defense. So it's used in the guidance systems for missiles and things like that. So what's happening is the United States and allied countries are trying to find other ways to access those critical materials. China realizing that they really have the pole position as it relates to the refining and production of rare earths, has really used that position to leverage trade negotiations with the United States. So what we're starting to see now is, the U.S. and other allied countries like Australia and Canada working together cooperatively to really secure those supply chains. Just this week, we've seen that the U.S. and Australia have agreed to building out some of that production capability within Australia. So Australia is a very important commodities partner. They have access to a lot of critical materials, whether it's rare earths or uranium or any, nickel, things like that, lithium as well. And we're starting to see countries go down the path of talking about stockpiles. Australia's talking about that and potentially letting other countries buy into that. The U.S. announced last week that the Pentagon's looking to build a $1 billion stockpile of critical materials, rare earths figure to be an important part of that.
Yes, and along those same lines, I recently read that JP Morgan is creating a $1.5 trillion security and resiliency initiative in key sectors such as critical minerals. And this will include both venture funding and also direct investments into companies of up to $10 billion. So that's quite significant news also.
It is, and when you really drill down into that announcement, they have, I think it's 27 different areas that they're looking to focus on. One of those areas is on mining and on the production and refining capability of critical materials. They look at these and say, if we're looking from the United States perspective, what are those aspects of the economy that are important to maintain a strong economy. So that's why they're looking to invest there. We also see in nuclear energy, that's another specific point where they're looking to invest, as you said, up to $10 billion. So this is something that we've seen over the last several years where governments and the U.S. government has started providing grants to companies. We're starting now to see the private sector invest directly in all aspects of the critical material supply chain. We're seeing it, from hyperscalers, so those large data centers that are associated with AI. Oftentimes, they have clean energy mandates, but they also have a very intense need for electricity. They're increasingly turning to uranium and nuclear energy for its reliable baseload power. And what we're seeing in many cases is the U.S. government starting to take uh, different equity positions. MP Materials, which is a rare earths miner, the U.S. government's taking a 10% stake there. Trilogy Metals and looking to build out a copper project up around the Arctic. You look at Lithium Americas, which is a Canadian-based company, but with assets here in the United States. All these companies are just ones that have been announced. We've also heard from other companies that they're in discussions with the government for potential equity stakes as well.
And you touched on nuclear energy. It's worth mentioning that 20% of the electricity in the US comes from nuclear energy. They consume 45 to 50 million pounds of uranium annually to run those nuclear reactors, but yet the US produces very little uranium.
Yeah, and this is one of those aspects where having a very close relationship with Canada, which has large uranium reserves, is of utmost importance. And not only do we have the largest fleet, we see rapid build out in China as it relates to their nuclear capabilities. But within the United States only, if you figure that about 170 to 180 million pounds of uranium is being produced on a global scale, by the time we get to 2050, and the Trump administration has said that the goal is to quadruple nuclear energy capacity by then. We could see just the amount of uranium needed within the United States alone actually greater than what we're producing at this point. So one of the common themes that we see run through a lot of these critical materials is that there's this impending supply and demand imbalance. So some metals like copper flip to a supply deficit this year or expected to finish in one this year. Others like uranium and then going into the future, copper are expected to be in these decades-long prolonged deficit. So that's an area where we see governments and private companies really trying to incentivize production because they see the growing demand and they see the issues with bringing more supply on.
That's a great overview. So why don't we examine some of the products that you and your team have developed so investors can invest in some of these rare earth elements and also critical minerals? Where do you want to start?
Yeah, I think the Sprott Critical Materials ETF is one that's really caught a lot of investor attention here over the last 18 months or so, and we've really seen it ramp up in investment activity in the last 5 to 6 months. This is an ETF that allows investors, by investing in just one fund, to access a broad group of critical materials. It's those 9 materials I mentioned earlier: the battery metals, uranium, rare earth, silver, copper, and it's unique in that we have a pure play approach whenever we roll out a new ETF, and basically our goal is to provide the most pure access to the metals, whichever's in the benchmark. So in this case, we have a 50% revenue or asset test, meaning to be included in the index, they have to have a majority of the revenue coming from mining one of those 9 critical materials. It's very unique in that it is a pure play index. We also include uranium, which a lot of diversified critical materials type ETF strategies might not include in there. And when you start to look under the hood a little bit, you'll see that about 25% of the exposure is to uranium equities, another 20% to lithium, about 19% to copper. And you also have a meaningful exposure to rare earths coming in around 17 or 18%.
And I'm sorry, what's the symbol and where does it trade?
That would be SETM. It's primarily listed on the NASDAQ, but available throughout the US and anywhere that has trading in the US capabilities.
And you also have an active metals and miners ETF. Tell us about this one.
Yeah, this is ticker METL, or metal as we call it. It's our most recent ETF, launched back in early September. So far, we've gathered about 35 million in assets. This is an ETF that we were really keen to bring to market. Our legacy at Sprott is in metals and mining. We have several decades of experience there, a well educated and experienced investment team. And what we're able to do is rely on that experience and bring out an ETF that really allows that investment team to take an active approach to not only critical materials, but other metals as well that we view to be important to infrastructure build out and growing out the economy, whether it's through electrification or as we see in developing nations as they're looking to modernize their economy. So not only does it provide exposure to critical materials, there are other exposures to metals like steel, platinum, palladium. They also have a broader mandate to invest in aluminum, zinc, gold, and iron ore. So a very wide mandate. And when you look at active management, some sectors we think can benefit more than others. Mining is one of those sectors that, because it's so complex, that we feel like an active strategy could do quite well because we tend to see a very wide dispersion in returns. And a lot of the returns in mining is really found in the top 25% or so of mining equities. So we think that by going through our process where our investment team conducts over 200 management team meetings a year, they're visiting up to 30 mine sites each year, really gives them the knowledge and insight that you might not get through traditional financial analysis and allows them to look for those outperforming companies.
No, I'm glad you brought that up because I often wonder, and this is a discussion we hear quite often, whether or not active money managers can beat passive products, but you're saying they can.
Yeah, in a sector like mining, it makes a lot of sense. And that dispersion in returns, if we're to look at the top performer versus the bottom performer within the category over the last 5 years, that's averaged about over 600% actually each year. So there's typically what you see, the top 25% tend to perform very well. The bottom 50% not so great. So by having that active approach and the flexibility in the management structure, it allows them to, move in and out of positions that they think will outperform over the longer term.
Steve, one of the themes you touched on earlier is electrification, and in order to build out these grids, et cetera, we need lots of copper. And even in a typical traditional car, you're looking at 50 pounds of copper versus a hybrid, which is 80 pounds of copper. An EV, depending on the size, can use 150 pounds of copper or more. What products do you have focused on investing in copper?
Yeah, so SCTM has that 20% allocation to copper, but we do have for investors that want a more targeted approach. We have the Sprott Copper Miners ETF, ticker COPP, and we also have a junior version, COPJ. Both of these strategies are pure play. If we look at COPP, this is going to give you that all cap exposure, and it also has about a 5% allocation to physical copper. So if you look at the copper mining landscape and the strategies that are available, it's the only pure play all cap copper ETF, and it's the only ETF to offer physical copper within the holdings. Pure play becomes very important when you start to look at an industry like copper. If you were to look at the 10 largest producers, you would see that only three are either publicly traded or predominantly copper miners. So that means that, other strategies that might have an approach of, investing in the largest copper producers or companies that have a significant portion of their revenue coming from copper, we're targeting specifically on those copper producers with the hopes of providing less unintended exposures. Our COPJ, our junior copper miners version, is also a pure play strategy. There's not a physical component to that, and it's the only junior copper mining ETF available to U.S. investors. And this is a way for investors to invest more in those development and exploration type companies.
And once again, when it comes to copper, we've had many bottlenecks this year. We've Freeport, which is the world's largest copper producer, they had to shut down one of their mines over in Indonesia. Is it still shut down?
Yeah, so that's the Grasberg mine. They had a massive landslide or mudslide earlier this year. They don't expect to be back to full capacity for production until 2027. It really not only sent a lot of mud into the actual mine itself, but damaged a lot of the infrastructure. So it's the second largest copper mine in the world. And when you look at that and some of the other major disruptions we've had, so far this year, we've seen about a 5% reduction or disruption rather, in copper producers. This is something that we tend to see year on year. lot of the large mines have been impacted this year. We've had civil unrest that have closed some other mines. So copper's unique in that not only does it have that favorable supply and demand outlook for investors, we're seeing investments start to come in with some mergers and acquisitions that are happening specifically on the basis of larger, maybe more diversified miners targeting pure play copper producers or just the copper assets. Lets you believe see how important that's being viewed within the industry. Also, what we tend to have with copper mining is that a lot of the easy to get to material has largely been mined out, and we see declining ore grades. This makes it much more difficult to ramp up production. We're not seeing large discoveries like we have in the past. Over the last decade or so, we've only seen out of the 250 or so discoveries, only about 14 of those would be classified as major discoveries. So a lot of disruption in the industry, issues bringing on new mines, and we're starting to see investment come into that space, whether it be from governments or private companies.
Steve, one other metal I want to ask about is lithium. 2 or 3 years ago, lithium was just ripping to the upside. It was up huge. And then all of a sudden, I'm not too sure what it was, but it just cratered. And all the mining stocks associated with lithium also pulled back significantly. EV stocks also pulled back significantly. But maybe you can just touch on what's happening with lithium, and have we found a level where we're starting to consolidate now? Is this sector that investors should be looking at, and what products do you have for investors?
Yeah, those are all great questions. And the lithium industry, I think, is kind of the poster child for the influence that China is able to have as it relates to the critical material supply chain. They're by far the leader in the production and refining of battery grade lithium. Very important for not only storage, but also EVs, as you mentioned. When you start looking at kind of the underlying market dynamics, what's happened there is as the price of lithium came down, that is making it much more difficult for miners to invest in mines, right? And increase production as we see falling prices. We need a higher incentive price. Because of that, we've started to see, and I mentioned Lithium Americas as a company that the U.S. government has taken a stake in. That's to keep a mine in Nevada on track to begin producing lithium. We've actually seen the U.S. Treasury Secretary come out and mention that the administration plans to set some price floors for some of the strategic industries. Presumably, that would include critical materials and not just semiconductors. So we do see from the government standpoint, equity stakes happening in companies. There's the potential for some sort of price floor, which will give some stability to these mining companies and hopefully crowd in investment. But what we're also seeing is, in the United States, we tend to be a little bit different and isolated, excuse me, isolated from what's happening in the rest of the world. EV adoption continues to move on, quite nicely at a good pace through much of the world, even as, the headlines in the US might have you believe that, EVs aren't being adopted quite as much. We're not the major player in that market. That's China. We see the European Union, many countries there have actually gone predominantly electric in their new vehicle sales. So a lot of these factors are coming to play. I think the short story is you had an oversupply of lithium in the near term that crowded out investment. We saw prices come down. I think we're at a point now where we're starting to see not only individual companies, but governments understand the value in lithium and the supply chain around batteries. That's starting to bring investment back to the table. And, we're still have a favorable opinion on lithium moving forward.
And Steve, what products does Sprott have for investors so they can focus in on lithium?
Yeah, so the Sprott Lithium Miners ETF, LITP is the ticker, also listed on NASDAQ. That's going to be a pure play lithium miners ETF. That's the first way and most pure way out of our lineup. Also in SETM, there's about a 20% allocation to lithium. But we find for investors that want to see that targeted approach and maybe overweight their exposure to lithium, LITP tends to be where they go. We do see that lithium, unlike what we're seeing with maybe some of the other metals, tends to be very news driven. So we tend to see these larger pops when there's positive news for the industry. But as with a lot of the critical materials, we would tell investors to expect some volatility as we're going through a structural shift in the global economy.
I was in London recently and I saw a lot of those Chinese produced EVs, the BYD,
Mhm.
beautiful cars.
Yeah, and that's one thing I think that gets lost within the U.S. We are so geographically dispersed across the continent. Once you start going to China and many parts of Europe, it's very much urban, right? So EVs tend to be a much easier mode of transportation. While we still have, it might not be quite as practical in the U.S. What we think that we're going to see in the United States is a little bit different path. Instead of going from gas-powered cars straight to EVs, we expect to see hybrid continue to see some advances in acceptance, whether that's plug-in hybrid or other types of hybrid vehicles. And with that, you do still need some pretty significant battery capabilities. We do still see a demand for lithium coming from hybrid. Not quite as much as EVs, but still positive for the demand picture.
Yeah, I recently took out a Honda Civic. I think it was a hybrid. Beautiful car. My
Yeah,
kids didn't like it though.
they're really technology forward, right? And when you start looking at EVs, it's not just only about the lithium in the battery or even in hybrids, but you also have all the increased copper because of a lot of the electronics that you tend to see in EVs. They tend to be very clean looking and technology heavy. So we also see the rare earths in EVs. It's used in the magnets within the motor. So all those components are very much necessary for increasing our EV production.
I've taken out the Teslas too for test drives, but I think it's still 5 years away before I would purchase one. And I live in Toronto, so these batteries don't perform too well in cold weather. I'm told they lose 20 to 30% of their charge in cold weather. So once they improve the battery chemistries, maybe I will think about it on a more serious note. But even the infrastructure, we still don't have the infrastructure here. Like I can drive to Montreal, which is 6 hours away, no problem, or probably down to Buffalo or Detroit, but if I have to go somewhere further, it becomes an issue because we just don't have the infrastructure here in Canada.
Yeah, and that infrastructure build out as it relates to EVs is one of those aspects that we think really feeds into the demand for critical materials. You start to think about copper needing to, as you're setting up these charging stations, it's the second most conductible metal behind silver, which is far more expensive. So copper tends to be used in the EV chargers. You have to run transmission lines. You need infrastructure that tends to require lots of steel, which would be, one of the reasons why we see investors taking a look at METL because it does have that steel exposure, it does have the ability to invest in aluminum and some of those other infrastructure type metals as well.
Well, Steve, this has been a great discussion. I want to thank you very much for spending time with us today and sharing your thoughts on the various products. If somebody would like to check out or read up more on these products, where can they go?
They can go over to sprottetfs.com. So there we have a lot of information about each one of these strategies. We also have an insights page where we publish a lot of our research, a lot of our thought leadership, and it's very regular updates that we're doing. A lot of these metals are on monthly updates, so we're very much investing in the thought leadership side of this as well.
Yeah, and I would just echo that sentiment to our viewers. One thing you and your team do very well is educating people on resources and minerals and how they benefit society, but also how you can invest in it. So I would encourage our viewers to go check out your website. Steve, once again, thank you.
It was great. Thank you.